early on in my career, I noticed there was a big difference in the way that people pay taxes. And it seemed like the people that made the most money paid the least amount of tax. And I really wanted to understand the how and the why of that.
We've got Dominique Molina with us. Dominique, welcome.
Thank you. Thanks for having me, Nate. It's great to be here.
So if you wouldn't mind, just kind of take a little time here and explain a little bit of your background, who you are, what it is that you do, and we'll just kind of go from there.
Sure. So I am a CPA and I have spent my career as a CPA, but what I'm most proud of in my career is my work as a certified tax strategist. And what that really means is it's looking at the tax code and analyzing someone's situation to be able to make small shifts in their investments and how they own their businesses, and planning for the best way to do that with the least amount of tax possible. Mm-hmm. And I think what got me very interested in this field is that early on in my career, I noticed there was a big difference in the way that people pay taxes. And it seemed like the people that made the most money paid the least amount of tax. And I really wanted to understand the how and the why of that. And that led me down this path that has really shaped my career and helped me to work with thousands of business owners and retirees across the country pay the least amount of taxes legally allowed.
That's a great segue, because I have done presentations on taxes before and actually used to prepare taxes for a number of years. Mm-hmm. And you mentioned tax planning and looking forward. And what I've told people is there's a big difference between probably the normal CPA that somebody goes to. And I'll even put myself in this camp. Back when I used to do taxes, this was kind of how I approached everything, because at that point I didn't know any different. And so what we would do is we would just get their tax return, another tax return. We basically got all their numbers and we just put them in the right boxes. That was it.
Right.
So it was looking backwards and just tax preparing, not really doing any tax planning. So I guess I'll defer to you on this. How would you define those two differences, tax planning versus tax preparing?
I mean, you're exactly right. And I think you've probably even maybe experienced some frustration with that, Nate, as you look back on that career in the tax world. When you are preparing tax returns, you're really just a historian. You're recording what happened, and you can't rewrite history. Mm-hmm. So you may even have experienced this frustration of looking at, oh gosh, if they only would have X, Y, and Z, it would have made a big difference. And I think in the retiree market, we see a lot of mistakes with, when someone passes away, whether it's a spouse that handles the majority of the finances and the surviving spouse kind of makes some pivotal mistakes that really impact the tax situation. There just isn't a lot you can do after the fact. And so with planning, it's really the opposite of that. It is forward thinking. It is looking at where is somebody now in their tax picture, where do they want to be in their life and with their wealth generation. And then we take that compared to what breaks we know to be available in the law, and there's over 400 different tax breaks available, and you make small shifts that make those tax reductions possible. And when you do that in advance of the close of the year, you then are recording a much lower tax transaction, such that people are seeing their bank accounts grow by thousands of millions of dollars as a result of that.
Absolutely, because if you pay less to Uncle Sam, guess what? That means more that you can spend. And in retirement, that's extremely important. I think I heard a statistic that good tax planning can actually help extend a portfolio by 7 years.
Oh,
and
yeah.
That came from the American College of Financial Services. So that's amazing.
Yeah, and I would say too that It's probably even longer than that the earlier you get started. Obviously, you know, when you're looking at planning for your assets in retirement, the later someone gets started, the less time you have to grow that wealth sufficiently. And the same thing can be true of tax planning, is the sooner you get involved in that, the longer your assets can exist, because you've got that much more time of less tax on your side.
Absolutely. And the way to win the game is, first off, you have to know the rules of the game. And if you don't know the rules, you're at a disadvantage.
Right.
And the other team happens to be the IRS in this case, and they know the rules. I've seen and I've heard a couple different camps that CPAs usually fall into.
Yes.
The first camp is those that are completely erring on the side of caution. They don't want to get too creative because they're just afraid that their clients are going to get audited. And then you've got the extreme other side that's just like, you know what? We are going to try to get every single deduction that we possibly can, just document everything like crazy, and almost daring the IRS to audit their clients, right? So
Sure.
Where do you think you would fall on that spectrum?
Well, I think it depends on who's assessing me, right? Because there may be somebody in the camp that you described earlier that's very, very afraid, that might say that I'm extremely aggressive. I wouldn't classify myself as aggressive, though. What I would say, Nate, is that you don't really have to be aggressive, because there's so many ways to legally save tax that you just don't ever have to go there. There really shouldn't ever be any bending of the truth. It's always about following things to the letter of the law. And when you do that, you don't have anything to fear. So when you have a good understanding of the law and when you follow it, I certainly don't invite an audit. It's not a pleasant experience, but at the end of the day, it's a fact of life that people are just audited. That's another key too, is really understanding who gets audited and why. To a certain degree, it's random, but there are other cases where we're fortunate enough that the IRS tells us. They actually disclose every year who they're auditing in terms of descriptions, you know, people who file certain forms, for example, or people who take certain positions on a tax return from time to time. And so that informs us, so that a good tax plan will also kind of help you navigate around those things that are higher risk of being audited.
As always, if you want more information on retirement, our contact information and calendar link is going to be in the description. And don't forget to smash the notification bell, hit that, smash the subscribe button, then hit the notification bell, in that order. That's kind of how you want to do that, right? That way you can make sure to stay updated every single week on new content to help your retirement. And we also have another YouTube channel for a podcast called the Retirement Rescue Radio, where we dive deeper into a lot of these topics in a lot more long format style. Once again, just trying to bring you enough content to educate yourself so that you can live the retirement that you deserve. So take care, and we'll see you next week.